All right, good morning, everyone. Welcome back to day 2 of the One-to-One Mining Investment Dubai event. We are happy to see so many great faces this morning and looking forward to a really successful day again. So just as a reminder, we are going to be sending out surveys after the event, so we do want to hear your feedback. Give us any tips that you have for future events as well. There will be closing drinks later on today. We look forward to hosting you all there. But in the meantime, let's get started with our opening panel for this morning. So I'd like to call up to the stage Tim Casben, partner of Gowling WLG, Keba Keinde, founder, chairman, and CEO of Millennium Investment Corporation, Larry McClure, senior investment officer at the Embassy of Canada for Abu Dhabi, and Alexander Millar, managing director at Wittelsbach Consulting.
Good morning, everyone. My name's Tim Casben. Head up the Middle East for Gowling WLG. We've got 50 people in the region, about 1,700 people globally, sort of Anglo-Canadian firms who are doing a lot in the mining space. Thank you very much to One-to-One for hosting us, and I'm delighted to be joined by a very distinguished panel this morning, so thank you very much, gentlemen. I'm going to start by really asking each of the panelists to introduce themselves and really kind of talk about what they're doing in the kind of mining space in the region, just to kick off, to give a sort of flavour of what's happening in the region. So, Keba, I'm going to start with you, if that's okay. Thank you.
Hello. Works. Thank you, Tim. I'm Keba Keinde. I'm the chairman and CEO of Millennium Investment Corporation. We are an investment company established in the DIFC since 2005. Over the past 4 years, we've been investing significantly in the mining industry, mainly in Africa. To date, we have assets in several countries. We have iron ore assets in the Republic of Guinea and also in Sierra Leone. And we have copper and cobalt assets in the DRC.
Alex, thanks.
Alexander Millar, Managing Director of Wittelsbach. We're a consultancy, strategic and technical. We basically either work with mining companies to undertake asset reviews, or what we're focusing on in the region is advising Saudi family offices on how to enter the mining sector. So we have the privilege of helping them deploy very large amounts into the sector in the next few years.
Thanks, Alex. Larry.
Good morning, thank you. Larry McClure with the Canadian Embassy in Abu Dhabi, and our offices with the Trade Commissioner Service support Canadian entities around the globe in different jurisdictions, across sectors, and my specific role is actually on the investment side. So we work with local investors from the region, and I cover the wider GCC region based out of Abu Dhabi, looking for partnerships into Canadian opportunities, whether that's a specific project, greenfield investment into a specific entity, relocation of a company from the GCC. So not necessarily sector specific here in mining, but one of the opportunities obviously is a great entity across the board with Canadian companies, obviously many here today. Part of the support is obviously finding locally based investors that are seeking opportunities in this particular sector.
So, Larry, just in that sort of context, it'd be interesting to understand your kind of experience of what investors are looking for and how they're kind of structuring themselves for investments from the region outbound into Canada and other places that you've had experience of. Thanks.
Yeah, thank you. From my perspective, a number of conversations that we've been having with local partners here that are looking to make investments at the moment, from an institutional perspective, are very much geared towards asset-producing opportunities that are already cash-generating, going concerns, as opposed to the junior scene. However, the conversations continue to evolve, and I think what we've been hearing on the ground from Saudi, from Qatar, from the UAE, there's more and more appetite and interest moving forward to look at further upstream opportunities because they see the value in this entire ecosystem. So from the investors that I'm speaking with, specifically from the UAE. They are looking at copper plays at the moment, and certainly interested to explore third-party opportunities. They've identified Canada as having IP and technology in mining that is superior in a number of facets. Certainly not necessarily the only option, but because of some of the things that have come out of Canada specifically, they're looking for partners that might be able to bring those technologies to opportunities perhaps in the US or in Australia and other tier 1 jurisdictions.
So Larry, I think, I mean, from what you're saying, that particularly the UAE tends to be more institutional investors at the moment. I'm not sure it's sort of filtered down quite so much into the family offices in the way that in Saudi, I think, Alexander, there is interest from a number of Saudi family offices. And do they have that kind of same investment profile they're looking at, or is it different?
Yeah, I'd echo Larry's view. Producing or near production is key. It's one of the main criteria they're looking for. You have to remember that they're fairly new to the sector, and if some of them have been pledging billions of dollars to enter into the sector, so it's got to be of size to be able to move the needle for them, and it's also got to be, for their initial investments, they are going to play safer. They're going to remove the execution risk. They're going to go for producing assets, and they have the wallet to pay the necessary premium to do that. As they get more confident in the sector, there will be interest at earlier stages. And from a geographical perspective, there's an advantage there. They don't have the hang-ups that the major mining companies have of going into certain areas in Africa. This opens up more opportunities for Saudi investors, but it also means that juniors in the space in those in certain geographies may find a new source of funding. Saudi is developing, and it has the ambition to be a major player in the sector.
Yeah, thank you. Thanks, Alexander. I mean, Keba, that brings neatly onto you, actually, because I think actually this sort of being a bit more agnostic about where they're investing and a bit braver on investment is, I'm sure, your experience as well, because you've sort of heavily invested in Africa. And have you been able to attract co-investment from the region into those African assets?
No, I agree with what has been said before. I think this has to be seen in the overall strategy of the region in terms of preparing for the energy transition and building significant processing facilities in the region. And because of that drive today to have sovereign entities and semi-private and semi-public entities that are investing heavily in mining companies, the financial investors are gearing to the mining sector. And today we do have a growing interest in mining opportunities from the financial sector. But as it was said before, right now people are not really looking at early stage exploration opportunities, and the ecosystem that we see in Australia and Canada is not there yet. But for near production or pre-IPO situations, there's a lot of interest in the region, and we are one of the companies investing in those type of opportunities.
And Alexander, you mentioned the size of investment. I mean, it is, the typical investors here are looking for significant investments as well, and I think that's kind of one of the challenges, particularly for the juniors, is that the investors aren't sort of looking to sort of spread thin across multiple investments. They tend to be looking for that sort of sizable investment. Yeah. And do you see, I mean, you think there might be a change? Do you think that may change over time?
I think it will develop. As in conversations that we've been having here, if there's a story that gets you to scale, if there's an upside case, then there could be interest. And the advantage of the Saudi and the Middle Eastern investors in general is that it's patient capital. You're not looking at having to deliver immediately in a 5 to 7 year time horizon as you would with some of these private equity groups. There's more patience, there's more loyalty, and it comes down to almost the personal chemistry between the team and the potential Saudi investor.
And with the Saudi investors, obviously, I mean, Saudi have announced that kind of the third pillar of their industrial pillar for Vision 2030 is going to be mining behind oil and gas and petchems. So the Saudis are kind of serious about sort of outward investment, but also looking for partners in Saudi.
Yeah. So and I think that's an important distinction to make. There are different groups within Saudi looking at the mining sector. There are those that are trying to support the development of homegrown industries in the kingdom and aligned with Vision 2030. And then there are those that are looking further afield and saying, well, Saudi is in a fairly nascent state in terms of opportunities in mining opportunities themselves in the kingdom, but within sort of 5 to 7 years, maybe there will be things that they can come back to. So in that intervening period, go out into the world, understand the sector, develop relationships, develop skill sets that allow you to then come back to the kingdom and become a local champion.
Yeah, I think that's right. I mean, and Keba, you sort of mentioned the processing side, which is obviously fundamental for a lot of the regional investment, is that they're looking to invest out and then have offtake back, which is obviously important for the region. Can you talk about that a bit more and what sort of minerals that are particularly attractive to regional investors?
Yeah, sure. I think the region, the GCC, is as a comparative advantage in terms of processing because you have significant potential in clean energy, you have a very well-developed infrastructure, and the geographic position allows us to access the core markets, I mean the critical markets globally. So everybody is trying to actually move their processing facilities here to be able to benefit from that existing infrastructure and also to be able to benefit from the capital available in the region. So that is a significant opportunity. But what you need to understand is that you have clearly different types of investors. You have the sovereign investors who do what you said, which is to actually try to secure minerals for these ambitious industrialization and energy transition plans. And different countries do it differently. In Saudi, it's true that the sovereign funds there, or sovereign institutions, tend to acquire stakes in very large established companies, the likes of Vale and others, with a view of securing some offtake. Here in the UAE, what we've seen so far is different. We've seen sovereign institutions go and acquire or develop greenfield projects, such as the bauxite project in Republic of Guinea, or the recent acquisition of the Mopani assets in Zambia. So different countries have different ways of securing that offtake. Now, for the financial investors, it's a different ballgame. You have different, I would say, types of family offices. You have the very large ones who can play, in this game, and you have the relatively more, I wouldn't say small, but less large, I would say, that tend to be looking at it differently and would invest small amounts eventually as a way of participating to this casino opportunity, but will not take a significant interest into the mining sector so far. So it's not the same in every single country. It's not the same between financial investors and strategic investors, and also within financial investors you have different strata. And they look at it differently in terms of investment opportunities and what they get into.
Perhaps just to follow on that note, the family offices in particular, we've noticed a differentiation between the way that they make connections and certainly establish relationships long term. One of the key components we've noticed on several projects is that follow-on. Maybe it's an initial $500,000 or $5 million, but several draws as the relationship develops. And I think for many of you sitting in this room, that might be your target audience at the moment, looking to build those long-term relationships with smaller family offices, and having the exposure of your opportunities here will get you a little bit more notoriety for the future draws with larger sovereign institutional opportunities down the road. If they're aware of your opportunity and you have an existing relationship with a local partner at a family office or multi-generational family office, that may lead to more significant draws from more investors from the region.
And I think it's really important to understand that it is a long-term game here. And I think somebody was talking about the 3 Ps, so sort of patience, perseverance, and persistence, because it is, but it is building those relationships. So it is really a relationship play here. I've been in the region 16 years, and it takes a long time to sort of break through into those relationships. But once you have the relationship, it can be a really fantastic relationship. So I think sort of that patience is really important, and kind of understanding that, particularly kind of the family offices. And Alexandra, that's your experience as well, that sort of patience and getting to know, because you will have had the same thing, I guess, from your perspective, that it takes time to...
Yeah, and as Larry was saying, follow-on might be within the same company, or it may be that you've established that relationship with a particular group of companies. So I remember back in the day when I started out in the region, it was with Al Raji Holdings, and they supported Petra Diamonds to take out the Cullinan diamond mine from De Beers. That relationship started with them making an investment into Petra itself, getting to know the team, and then they said to them, well, look, the next time you want to do something big, come to us. And so this was the first time that a Saudi family office, as far as I'm aware, had gone into the mining sector successfully, and they went in at the asset level. They went in on a 50-50 basis with Petra. There was a pathway for them to exit because they were financial investors. They weren't seeking to become a mining company. But they successfully helped Petra to take out Cullinan, and then they had established a relationship with a key South African mining family, the Panellists. So when Panellists wanted to then do Theresa Chrome, they were a ready backer. When they wanted to do Elan's Platts, they were there for them. So they built up a relationship with the group. It wasn't just with that one company.
And Keba, has that been your experience, and particularly sort of maybe structuring going in at the asset level rather than necessarily a sort of listed entity? I mean, have you had experience with that?
Yeah, again, it depends on the type of investors. With regard to Saudi in particular, the sovereign funds, have sometimes acquired stakes in, large listed companies that are producing assets to secure supply. But with regard to the financial investors, yes, it is true that, you have to be patient. But there is a close relationship between the private offices and the sovereign entities. I mean, obviously, people will feel more comfortable investing into sectors that are being actively invested by the sovereign funds. To be more specific, today, we all see that there is a push in the region to become a hub, let's say, for green steel. There is a push for the region to become a hub in the refining of copper, and even downstream with the production of cars and electric vehicles and so forth. So those minerals that actually are within that overall strategy have more chances to raise capital from private offices, because they know that down the road, if they're successful, there is a potential for a significant exit, or the potential to actually have synergies with the large industry that is being developed in the region.
And I think that's really important, particularly for visitors to the region, because I think there is often some skepticism about the sort of push for energy transition, etc. But it's genuinely real here. There is within the region, there is a genuine push for energy transition, and partly is because the region, generally UAE, Saudi, want to be exporting their oil rather than using it in country. I mean, that's the reality, and therefore the more energy they can produce in country through renewables, and they've got a big nuclear plant here in the UAE, the better, and that's just the reality of what's happening in the region. So I think that skepticism can be quite misfounded. I mean, actually, Larry, I mean, do you have a kind of take on that actually there is a genuine desire for energy transition here? And
I would certainly agree. A number of local entities, whether it's Masdar out in Abu Dhabi or the sovereigns, the parents themselves, and I think this sentiment was certainly at a world level was presented at COP28 last year here in Dubai. A number of the initiatives that you've just mentioned, particularly in green steel, are something they're working with global partners on and actually implementing on the ground with their operating assets, such as EGA, Emirates Global Aluminum. So these are concepts that I think this particular region, specifically the UAE, are very keen to adopt, and then they see the long-term value in. So there are other minerals, I would argue, that not just base metals, but also silver and a number of others that may be more strategic. Uranium might be on that list of down the road opportunities. We've seen the UAE now with their 4th reactor online for quote unquote renewable power. That obviously can be debated, but these are things that this particular country are doing very well and are very active in. So the knock-on effect and further upstream, more strategic opportunities in mining, I think will become even more prevalent in the future.
And from a macro perspective, obviously, there's a lot going on globally, and obviously there's change in the US. That there's Canada. There's sort of certainly challenges for some states investing in state-owned companies investing into Canadian businesses. How do you see that playing out and the role that the region can play in supporting that?
That's a great point. Obviously, the political situation in Canada, as far as sea change is concerned, is not like it is in the U.S. That being said, as the U.S. has made a change on January 5th, we'll likely see a knock-on effect to some of the policies that may be rolled back or bolstered with Canada and certainly in Mexico with our free trade agreements. However, the way this then plays in this region, I think, bolsters well, simply because Canada being a relatively flat jurisdiction as far as the financial system and the political system, regardless of leadership, bodes well from an investment perspective, simply because the investors are well aware that their capital is safe. So from that perspective, I think that bodes well here. The sentiment, perhaps, at least from a number of local contacts that I've been in touch with, are excited to see what the Trump administration will do moving forward. And the relationship here is pretty strong. So to that end, I think the ICA, the Investment Canada Act, is something that certainly could be a barrier to finding investors from the region, specifically into Canadian-based companies. On the backside of that, though, mentioned Vale. This is an opportunity, as well as another investor that will likely go public in the next couple of weeks from the UAE in another Canadian entity in lithium. They've successfully gone through the ICA process. So varying timelines on this, of course, and the vetting process, but I think these are good signals that investors from the region are certainly welcome in Canada.
Yeah, and I think that's a really important point, and I know there are quite a number of Canadian companies here today, and in fact, I'm Charles Bond, who's heads up our natural resource team in the UK, was at the one-to-one in London last week, and he was saying that I think 2/3 of the businesses there were Canadian, so outbound looking for capital. So it's good to hear that the region, from your perspective, is kind of is open to, or sorry, Canada is open to sort of capital from the region, because I think clearly that there become gaps when sort of certain when it's closed off to certain other areas, I guess. Have you got any comments, Keba, on the sort of?
Yeah, I think I would say a comment that is related to those considerations is that one of the advantages of capital from this region is that it's neutral. And in Africa specifically, when you have an investor from the GCC that comes, it doesn't come with the coloration or are you with China or against China? Are you with the US or against the US? So that is a very important consideration for large projects because in this region, this region does business with everyone, with the US, with China, and having capital from this region gives you the flexibility to maybe have offtakes with China or co-investors from China or offtakes from the US and co-investors from the US, which sometimes I think can be difficult in Canada, if I'm right.
Yeah, absolutely.
And that's why we're seeing some Canadian companies moving to the UAE to be able to accept capital from specific countries.
I mean, in Saudi, they make a point about the fact that they are able to be on both sides of it. So you might go into a boardroom one day and you've got the Saudi flag and a Chinese flag at the end of the room, and the next day it's a Saudi flag and an American flag at the end of the room. So they are very happy to sit on the fence there and to be a neutral party. And that's playing out a lot in Africa. We're seeing sort of opportunities where the US is working with Middle Eastern partners to address the Chinese presence in countries like the DRC. And one point I would also add is that these Middle Eastern groups generally come with an ecosystem. They probably have some exposure to renewable power generation or infrastructure or water treatment. So they can bring that expertise to your project, as in the way that the Chinese used to come with a whole package into Africa. And so that becomes quite attractive and actually may help with your story to investors. How it's not just what you can do for them, it's what can they do for you. If they can help sort out your power issues, right? If you're putting in a solar plant and helping to bring down your cost to produce, that benefits all parties.
Yeah, and I think that's a really important point around sort of partnership as well, and sort of looking at the investors from the region typically, the knowledge might be relatively low on mining or new on mining. It's increasing a lot, and they are relying on advisors to advise them. But they're looking for partnerships. They're not looking for just to throw cash in. And I think that's really important when you're looking to the region, is that you look beyond the money, but actually what other value add you might have to those investors. Is that your experience as well?
No, absolutely. For instance, to be specific, we invested in a globally significant iron ore asset in Guinea, magnetite iron ore asset, because we see that in the region, most of the steel plants are moving from blast furnace to DRI, and most of those steel plants are interested in the product that we're going to be mining. One of the key investment criteria was, to secure offtakes from the various steel plants in the region, and we're going to. That already happened, let's say, in the case of EGA with bauxite and so forth, but increasingly because of this overarching strategy, which is to have processing facilities across all the minerals necessary for the energy transition, those synergies will be more and more visible, and that will lead more and more investment companies like ourselves to invest in various sectors. So investors here in the region usually like to have some sort of strategic relationship with the larger, government entities, and it helps a lot to take that into consideration when approaching investors here.
And Larry, when you're talking to the investors, is that sort of a similar story? What are they asking you for, as it were, when they're looking for introductions into the market?
This is an interesting point, Keinde. You mentioned the equity partners versus perhaps strategic partners, and in the conversations that I have with smaller family office in particular, to your point, Alex, it's very much about ecosystem, and it's very bilateral in that sense. So when they're looking at opportunities to invest, whether it's globally or in their backyard, often they are looking for a portfolio. So how do you complement their other entities and vice versa? So that's one component. when you look at the larger institutional investors, this concept is a little bit different. However, they still want to bolster what they have. And if you look at some of the sovereigns here, their operating entities cover pretty well every sector. So there's often opportunities for you as a project to capitalize on some of the other operating entities that they have, because this may certainly make you a little more efficient or more profitable, but more importantly, you're joining a consortium. So looking at it from a strategic perspective, whether you're entering into a JV or it's simply an equity play from the investor's perspective, these are things that you need to consider when choosing your investor.
I'm just going to pause there to see if there are any questions from the floor to any of the panelists, or any observations rather than questions, if anybody's got anything. Charles.
Thanks. I'll ask a question, which is just about the nature of the investments that you might have seen in the region. Are those investments in say, more mining sophisticated countries like Canada? There's a whole different wealth of capital that's deployed. It might be debt, it might be equity, it might be royalties, it might be streaming. Are the groups here yet have a level where you can divide them up into those types of investment, or do most of them prefer just straight equity or debt, for example?
So far, I would say mainly it's equity. You do have also a significant offtake finance opportunities. But we haven't seen yet lots of royalty finance and things like that in the region. It will come. It will come very quickly. And I think that it was mentioned before, I don't want us to leave this room with a pessimistic view of the investors' appetite for the region. It is growing, and I think in the next couple of years, we will see private officers participate even more aggressively into the mining sector. But for the time being, it's mainly equity and offtake finance that people are looking at in the region. You do have also, equity or quasi-equity, I would say. You have convertible notes and stuff like that, especially in the context of pre-IPO situations. But the more sophisticated products are not yet very popular in the region.
Alex, is that your view as well?
Yeah, I'd agree. I guess one of the other points is that we've talked about copper a lot. There is also interest in more niche critical metals. And in those plays, it's very difficult. The instruments are going to be limited. So equity is the preferred route.
Yeah, my experience here was actually looking at a transaction for a family office in Saudi, and actually all the economics had gone off the table already. So actually there was streaming and royalties, and also there are various other instruments in place, which really meant the economics had gone already, which they saw very quickly, I think. But at the moment, I suspect it is more sort of equity and debt. Larry, have you got anything to add to that?
No, I would echo those sentiments. I think streaming and royalties may be something more for a smaller investor base, or at least on the capital side, with private placement perhaps. But the majority, I think, of the investors here are certainly looking at larger plays, larger cap plays. Specifically, the sovereigns may be 200, 300, 500 million as minority stakes in projects of significant size. So that I think as we see these develop and these assets begin to see returns for the investors, we'll see a knock-on effect in the variation of types of investments they make.
Yeah, I think that's right, and I think that probably goes to the point that at the moment they are looking for producing mines because they're looking for a more immediate return. I remember when I first came out here, I met my landlord who was an Emirati, and he said I like cash and property, and that kind of is it is a sort of that kind of does go to the mentality a bit. So I think this is a sort of relatively new area for investment, but it is strategic, and it is very much for the purpose of building up the ecosystem here in that kind of processing and the sort of energy transition area. Any other questions? Yes. Hi.
Is it on? Oh, perfect. Good morning. Thank you so much. My name is Nomfundo Klaba from Crystal Partners. My question was answered just around the appetite and the size of projects, particularly coming from Africa. There's always an interest to know in the region what is the appetite for those investments. But added to that, what are some other considerations, particularly for Africa? What is Middle East looking at as sort of I don't want to say deter, but what would be exciting as investment options? Thank you.
Keba, sorry, I'm coming to you.
Thank you for the question. I think, generally speaking, the region is interested in, minerals that they need for the energy transition again. And on top of that, also precious metals. So everything that has anything to do with, copper, cobalt, lithium, steel, iron ore, and other things is of interest to the region. And as well as precious metal, gold in particular. As you've seen, there has been a significant investment in the gold sector in Africa by either sovereign entities or private entities.
Alex, do you have anything?
I guess one other point is, look, if you're going to be interested in cobalt, there's certain geographies. If you're interested in platinum, there's certain geographies where you can go to, and a lot of them are within Africa. So I think, especially we're talking about the green energy transition. If you have a Middle Eastern investor who's already subscribed to the idea of green hydrogen, they're probably going to be interested in platinum, which is, they're probably one of the few groups that are still interested in platinum because they see the long-term forecasts. So that's where they will have an advantage. And it will be a less competitive landscape for them.
I just wanted to add, the UAE has a lot of interest for Africa, and really over the last decade has increased investment in Africa, and not just in large mining companies, but sometimes going and acquiring even concessions. So there is a clear know-how about how to deal with Africa here and an interest. And those partnerships will go even beyond the mining sector. I think 2023, I think there was more than $50 billion of investment from the UAE in Africa. And I think that it surpassed China in 2023. So really, this is the right place to look for investments for African companies. And again, as I said, it has an additional benefit that it's neutral capital. It doesn't come with political background. So I would encourage you to look for capital.
Yeah, I think that neutrality is really important. I know we've talked about it already, but I think it's worth emphasizing. I mean, if you look at Saudi, for example, and where they sort of sit globally, their kind of biggest off-takers of oil and gas are India and China. Africa's a very important market. They look to the US for defense. They've got OPEC plus with Russia. So they really do sit sort of very much in the middle. And I don't do it deliberately, but Europe doesn't feature in that discussion. But it is a reality, and there is a kind of new world order that people talk about. And I genuinely, when you sit here and have lived here for as long as I have, you kind of realise that actually that new world order is actually really genuinely happening. And I met a pilot who came out here about 25 years ago to fly for Emirates, and he said, I looked at a map and it's in the middle of nowhere, and now it's in the middle of everywhere. And I think it's such a great quote of kind of where we're sitting. But I thought we might sort of wrap up with just our panelists giving a kind of final sort of top tips, I suppose, if you were a company looking for kind of investment from the region, what would your sort of top tips be? Larry, I'm going to start with you if that's okay.
Great, thank you. From my experience here in region, I've been here in the UAE 9 years, and I think the most success that we've seen, and this is certainly a much more general comment about all sectors, but those that are coming, raising capital, are tenacious, they're persistent, and they're here often, and they spend a lot of time and energy building relationships, and that tends to be kind of the greatest value that the local investor base sees. And again, to my point about that bilateral component, bringing added on services or value beyond the specific project you're raising for also bodes very well. So my 2 cents would be come often, come regularly, and build long-term relationships with as wide of a net as you can while you're here.
Thank you. Alex, anything to add for that?
I completely agree. The other point is I would go back to what I said earlier. Do your research on who you're meeting with. Figure out what they can bring to the opportunity in terms of their ecosystem, and you're likely to have a much better conversation, and you're likely to actually, The one thing we generally see a lot of opportunities. A lot of them pass over the desk. It's the ones where they've actually thought, what do we add to the equation that actually have a much better chance of progressing.
I think that's really important. I mean, I sat in a meeting with a corporate advisory boutique in Abu Dhabi, and the first thing that the CEO came into the room and he flicked through their deck and he said, "Gosh, there's 6 here I haven't seen. So take something different. Don't just take the same opportunities that are being shown to them kind of week in, week out." So I think sort of showing something different, and as you say, where there is a kind of value add, I think that's important.
I would just echo that. I think sometimes there are misconceptions about maybe the region, and I think this is not necessarily a place where people will be throwing money at you just because you flag an opportunity. You really have to come really prepared. You are most of the time going to deal with sophisticated investors who are very well informed. So come very prepared, and also try to look at it as a partnership opportunity, thinking of what not only you can bring to the table, what the other party can bring to the table, and you can fit into their overall strategy. And I think once that is done, people tend to be to follow through and invest. But be prepared, and also don't have expectations of pulling out the deal of the century because you have sophisticated investors in front of you.
Yeah, I think that's really important. And Alex, I think you made the comment of actually getting to know who it is you're seeing is so important. We do see, unfortunately, sort of I get a number a year of these sort of fake term sheets coming across our desk, and if it's too good to be true, it is. I mean, you're not going to get money for nothing, and people do sometimes tend to think that they can walk in here and there'll be a sack of cash waiting to invest in whatever project, and it really isn't like that. Can't emphasize that enough. I think it being here and present on a regular basis is critical, and we've seen that in whatever industry people are looking to raise funds in. It's not just mining, it's everything. Before we finish, any other questions? No? Great. Well, I think thanks very much to my panelists. It's very much appreciated, and thank you.